When it comes to trading, it's important to have a straightforward strategy that you can follow and execute consistently. So today, I'm going to share my 3-step process to finding trapped traders. My hopes in sharing this process is to give you a foundational basis from which you can construct your own setups, and also to share my trading ideas and patterns that I believe in. Let's open up a chart and start breaking down the process. Okay, here we are on our chart, and let's start with step 1. Step 1 is going to be identifying the immediate trend, which also means assessing the big picture and allowing ourselves to understand what the market wants to do and what it could do. This means looking back at either the past hour, past 2 hours. It could even mean the past day or week. It really depends on what kind of time frame you're looking at. As a day trader myself, I like to stick to the past hour or even the past 30 to 40 candlesticks. That really gives me a good idea of what's going on in the market. So in this example, let's start looking at what this chart is trying to tell us. Let's kind of understand what the big picture is, what the market wants to do. And you may notice that there aren't that many candlesticks on the chart. That's because the market has just opened. This first candlestick is the first candlestick of the session, and already it's telling us a lot about the market. First of all, it's a gap down. That means that there was some overnight selling in the aftermarket session. And usually when you have overnight selling, it's going to transition into the day session, which means that we most likely are going to have a downtrend right from the open. So as a first analysis, I'm going to say we're in a downtrend. And because we're in a downtrend, I'm going to be looking for some sell signals. I'm looking for an opportunity to sell. And preferably that's going to happen on some type of pullback. And that's it for step 1. All we're doing is we're looking at the trend, identifying what's about to happen and what we think should happen. And then that's where we move on to step 2. This is where we're actually going to be looking for potentially trapped traders. This is where we ask ourselves the question, who is at risk? Who is making a big gamble right now? And when I mean a big gamble, I'm thinking something that is low probability, something that is medium to high risk, and then is also something that has, maybe a pretty medium to high reward as well, because that's going to draw in more traders if they think there's a good potential for reward. Usually the risky and low probability trades are going to sit on the counter trend side. So these are going to be setups that are going against what we believe the market is supposed to do. And that's where we circle back to step 1. We believe that the market is bearish, and we think that the market should pull back and we should look for a sell. So the counter trend trader is going to be the one that's buying. They're going to be the one that's trying to fight this trend. And in my opinion, that's usually the low probability option. So what's the easiest way to do that? Well, I think the best way to illustrate that is by listing out all of the potential buy setups. Let's jump back to the chart and we can start listing them out. So number 1 would probably be here. This is the first time that the market broke higher and we closed with a green bullish candlestick. I bet that a lot of traders or some traders would consider that a buy signal. After that, we have the second consecutive bullish candlestick. So it's advancing. The bull trend is showing some strength. People are going to hop on there. Then you have this higher low. After that, we have 2, 3, 4 more bullish candlesticks. I can see people jumping on in any of these locations. So 1, 2, 3, and 4. And there we have about 6 reasonable buy setups that traders would have jumped in on. And that is the end of step 2. Step 3 is now where we start to evaluate these positions. We start to look at these actual traders and kind of get a feel for what's going on in their mind. The biggest thing that we want to think about is, are they at risk? Are they in pain? Are they panicking? And the easiest way to do that is to put yourselves in their shoes. Let me switch the colors real quickly, and then we can go through each trader. So trader number 1 is going to be this buy at the bottom. And how do you think he feels? Well, he's probably in Disneyland. He's probably having an amazing time. He bought the lows of the day. The market blasted off. And I bet that he has probably taken profits up here. If he hasn't taken profits, well, his position is green and he's happy. So this is a happy camper. What about these other two traders? Number 2 and number 3, they're probably in a good spot too. Maybe not in the same Disneyland that trader number 1 is, but they're in a good place as well. Their position is most likely green, and they're probably considering cashing out, or they're looking at the trend and deciding, does this want to go on further? Do I want to keep holding? They're probably in that middle ground, but I think they are also happy. So let's give them a big smiley face there. Now we're going to start moving into traders number 4, 5, and 6. These guys, they just bought in. And what happened after they bought? Well, the market started to form these wicks. It formed this pretty big red bar. That's scary. And then after that, it made a lower high as it tried to wick up higher. It failed and then completely reversed. So how do you think these guys feel? I think they're a little uncomfortable. And they may even be in some pain. They could be freaking out. They just bought and, they're going crazy. They thought, this was a good buy signal. There was so many green bars. And at this point, they're probably panicking. This is what we want to look for. This is what we use the 3-step process to find these types of traders. And if we quickly recap that, we will remember that, number 1, we were looking for a pullback. We're looking for a sell. Number 2, we're looking for these buyers who probably have a risky play. And then number 3, we want to say, are they at risk? We want to look at their position and wonder, what are they feeling? Because if they're at risk, all it's going to take is one nice signal to flush them out. One nice signal will make these guys panic and they will run for the hills. Let's go back to the market and see what's happening as it unfolds. This great red bearish candlestick formed. This is where we're going to sell. Once it closes, we're going to come in. We want to take this opportunity. Remember, we were waiting for the signal. We were waiting for it to panic all of the buyers. And now, as you can see, the market is starting to flush down. This is exactly what we were looking for. We want them to panic. We want them to get flushed out. And there we go. Now we have taken our profits on what I thought was a pretty good trade. It lined up with the 3-step process that we had. And then we have already taken our profits. Honestly, this trade went way better than I expected. Usually it doesn't just completely flush down. Sometimes there's a little back and forth as it fights. But hey, we got lucky. It was stress-free and the market gave us what we wanted. Now, you may ask, okay, why don't we go for higher profits? Why are we only taking profits right here? Well, at this point, that's up to the trader. That's up to what you are most comfortable with. For me, my favorite trades are going to be the ones that are high probability and somewhat of a medium to high reward. In this case, I thought that it was, somewhat higher probability. We had that whole trap traders thing. They're going to flush down. And then medium reward, taking profits around here after selling up here. I think that's a pretty good trade. Now, if you want to go for a bigger trade, you could look for this to continue selling down, but that's not going to be as high probability. The market is going to start trying to defend. You could even think about, there's probably this trend line here. And as you can tell, there is a wick forming and there are some buyers that are starting to defend. So at this point, it becomes less and less of a high probability trade. But on the flip side, you're going to get more reward out of it. And at the end of the day, that really depends on what kind of trader you are and what makes sense for your trading strategy. Okay, now that we've learned this amazing tool, let me throw the 3-step process through a couple more examples. Here we are later in the day. We still have that gap down, so there's still a bearish tone. And then we've made this amazing sell-off. So step 1, we've identified that the trend is still bearish and the immediate trend is a flush down. And it's also coming into this double bottom. Moving on to step 2, where would people have bought? Well, they could have bought here and they may have already gotten stopped out, or they may be in pain. They're on fire. They're in the red right now. And then they could have bought in again, or there could be some new buyers that came in on this double bottom thinking that there's going to be support and the market may shoot up from there. So 2 spots where traders could be potentially trapped. Now moving on to step 3, how do they feel? Well, let's look at what happened after they bought. First of all, trader 1 is already in the red. And then trader 2 is starting to get wicked to death. 1, 2, 3, 4 wicks. This is not good for their trade. If they're looking for a nice bullish trade, it should have popped off something like this, where they bought and bullish bars just advanced right after their purchase. Instead, they're looking at this double bottom. It's getting wicked, which is not very convincing. Not many people are thinking that this double bottom is going to be a good trade. So we've gone through the 3 steps, and it looks like this is a great area for us to find some trap traders. Now we just have to wait for a signal. So let's play the market out. Let's see what happened. We're waiting for that signal, and the signal for me here was just the break below the doji candlestick. That's good enough for me. You could wait for this to close and be a red bar, but depending on where it closes, you might not have the best risk to reward ratio, because we are just looking to take out the lows here, and then maybe we could smash through a little farther. You know, as people are flushed out and they're getting out of their trades, the market does come down just a bit lower than the low. So there we go. We have already gotten out of half of our trade. And then if I remember correctly, I was looking to, potentially get down to the lows or take out some of these other higher profit targets, but we actually didn't get there, and I had to get out like break even or for, a small profit on it. So all in all, I think, it was a good trade. We found some trap traders. We flushed them out. Maybe I should have taken all my profits, but that's a whole different story. And the last trade that we're going to review is going to be up here in this bullish area. So the market actually sent it way higher. This is the same exact day. The market was playing around somewhere down here earlier in the day. It's now shot up. And so step 1, identify the trend. Well, that has reversed. We are no longer in that bearish tone. We are in a bull trend. And so we have to respect that. We are looking for a buy now, a pullback preferably, and then the counter trend traders are going to be those bears. So when we move to step 2, we are now looking for sellers. Where would there be sellers in this market? Well, the easiest way to look for that is that anytime the market breaks lower, there's probably going to be a seller. There's probably a seller here on this red bar. There's probably a seller. Again, the market tried to break lower. There's probably another seller. And then there's another seller here. So 4 sellers, 1, 2, 3, 4. Every time the market tried to break lower, someone tried to hop in, and they're looking for, it looks ridiculous when you look at this chart, but there's traders out there that are thinking that this market will just plummet and collapse. They're out there, and that is where we make our money. So don't laugh at them. They're doing what they're doing, and sometimes it works for them. But for us, we're looking at them as trap traders, and every time we notice that the market breaks lower, that's another handful of traders that we could potentially trap if we get a signal for the market to look higher. Okay, and then we quickly evaluate their positions. Well, I think that's pretty easy to evaluate. Every time it went lower, the market just went higher, and so they are in pain. All of these traders, all 4 of them, are probably scared for their life. I mean, if they looked back at the chart and they noticed that, well, the market is starting to defend every time it comes down to the EMA, and then they look at this trade and they notice, oh, wait, I sold, and then I looked back like 20 bars and I noticed that every time it came to the EMA, it was going to bounce and we're at the EMA again. I might be freaking out if I was one of those sellers. And all we need now is we need something to flush them out. We've gone through the 3 steps. We figured out it's a bull trend. We figured out that the risky players are going to be these sellers. We found that there's a handful of people that are at risk. All we need to do is wait for that signal, which is probably going to be a nice bullish bar. Let's see what happened. This bar is looking amazing. It just needs to close higher. It just needs to look a little more flush, a little more green. There we go. It closed, and we are coming in for the buy. Let me clean up the chart a little bit here. Nice bullish candlestick. That's where we're going to go and enter. At first it pulls against us. That's okay. This is our signal. And now we're looking for hopefully a new high. This is where the traders are going to be in pain. They're up here. This is where they're going to make their last stand. This is the pain point that we're kind of shooting towards. We're starting to get more bullish signals. And you'll notice again, we tried to break lower again. That's another handful of traders that are getting trapped. So you could also enter in on this bullish candlestick as well. Your risk reward might not be as amazing as it was coming in what is this, like 1 or 2 points lower, but it's the same thing. There we go. Breakout into the new high. We have flushed out all those traders, and that is the 3-step process, finding us this wonderful trade that maybe had a little stress to it, but it worked out the way that we had planned. And that's going to do it for the 3-step process. I hope you guys enjoyed it. I had fun teaching it. Hopefully you're able to implement it into your own trading strategy. So good luck out there and happy trading.